Hey everyone, welcome back to Corporate Decoder. Today we're diving into Credo Technology's latest annual report, and I promise it's going to be less snooze fest and more haha moments. We are going to decode how this company who wants to redefine high-speed connectivity is actually doing with that mission. If you want to debate with others about our opinion, make sure to join our Discord server linked in the description below. Credo had a huge jump in revenue this year, but is it all sunshine and rainbows, or are there hidden risks lurking? Let's dig in and find out. First off, this document is their annual report, which means it's a deep dive into everything they did over the past year. They're telling the Securities and Exchange Commission, and therefore the public, all about their business, what happened, and what they think will happen. Here's a big one, customer concentration. Credo relies on a few major customers for most of its income. To explain this another way, if one of those big customers decides to cut back on orders, Credo feels the pain. For example, one unnamed customer accounted for an amazing 67% of their revenue this year. That's a lot riding on one relationship. What happens if that customer goes away? Adding to that risk, Credo doesn't have long-term contracts with most of its customers. They work mostly on purchase orders. Purchase orders are different from contracts in that they are easier to cancel. So these customers are not locked in. This means customers can change or cancel orders on short notice, which can really mess with Credo's planning. Then there's the overall economy. Words like recession, inflation, and stagflation are mentioned as potential problems. If the economy weakens, customers might pull back on spending, impacting demand for Credo's products. They depend mightily on their own manufacturing partners to meet expectations. But if the general market falters, their production may slow or prices increase. It's really easy to see the positive with revenue increases across the board, but they mentioned having net losses and an accumulated deficit in previous years. Credo has a history of losing money. While they made a profit this year, there's no guarantee they'll continue to do so. They need to keep growing revenue to stay in the black. The world of semiconductors is a dog-eat-dog world. Credo faces strong competition and they expect this to keep increasing. To explain more simply, everyone wants a piece of the pie. Bigger companies with more money and resources could easily steal market share, and they all have greater brand recognition than Credo. Credo uses outside parties to make, assemble, and test their products. So they rely on a few key players to manufacture, assemble, and test their products. If these partners mess up, it can directly impact Credo's ability to get products out the door. Think of it like this. If the bakery can't bake the bread, you can't sell the sandwiches. A lot of Credo's future depends on how well artificial intelligence and machine learning do. If AI doesn't take off as expected, or if regulations stifle its growth, Credo could miss out on a major opportunity. It needs compute power and hardware processing to be good for them. Operating all over the world isn't easy. Different countries have different laws about trade, taxes, and data. Staying on top of all of that is expensive and time-consuming. They are doing a lot in mainland China, and the United States has restrictions on outbound investments in China. For Credo, that could be extra tricky. This is where keeping ideas safe can hurt. Credo could face lawsuits claiming they are infringing on someone else's intellectual property. If the case goes against them, they might have to stop selling certain products or pay hefty damages. Think about it like this, their competitive position can be hurt if someone sues them. Now let's dive into those financials. For the full year, they report product sales of $412 million. Product engineering services of $12 million and IP license revenue of 12. Sales had a huge increase. Engineering and licensing down quite a lot respectively. Jumping down the table, their gross margin increased from 61.9% to now almost 65%. A healthy margin is essential for running a good business with less financial burden. For example, in Credo's case, they had a near 3% increase as it will help their position. And research and development is up from $9,500, $14.6 million. R&D expenses continue to take a sizable portion of the company. They are essential costs to continue to be up to date in technological innovation. That increase comes at a cost, potentially impacting short-term profits. Finding that balance is always tough. One number that most readers would be overlooking, if not for the financial report, is that the company has $77 million in shared-based compensation, also known as stock-based compensation. The amount is not exactly taken from the revenue numbers, but it dilutes the company's value. Okay, having looked at numbers, let's look at the risks, and here is a big one. They operate all around the world and have to adapt everything to international laws and regulations. As the report states, there could be significant fines, criminal sanctions, damage to business reputation. The report goes on to say their business can be affected by new US government regulations restricting outbound investments in China. This is interesting because a lot of their manufacturers are near this location and may impact their ability to realize value from existing and future investments. Moreover, because the outbound investment rule ostensibly applies to indirect investments by US persons in entities that are persons of a country of concern, it currently inhibits our ability to raise capital through equity financings with US investors. This is very telling. The company may be in a situation where it can't really raise funds easily by US investors. That poses a risk for the future if they need money for R&D or manufacturing. Another risk is about them losing the ability to hold on to their intellectual property as they continue to do business around the world. If someone manages to copy their core technologies, Credo could lose a huge competitive edge. Here's a general risk. Bad things may happen. As the report reads, power outages, natural disasters, political, social, or economic unrest, and other potentially catastrophic events. If something big occurs in an area where they operate, it might negatively affect the business. Well, what's the verdict after that roller coaster ride? Their strengths include great tech and lots of happy customers. Weaknesses are that they rely too heavily on a small number of huge customers, and rising raw materials costs could squeeze profits. This company is in a hot area of the hardware market and has a lot of room to grow or to fail. Alright, that's our breakdown of Credo's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And also, if you want to debate with others about our opinion, make sure to join our Discord server linked in the description below. Thanks for watching. See you next time.